2018 ended with a lot of market volatility. And as we enter 2019, it doesn't seem like that market volatility is going to be going anywhere anytime soon.
Last week, all of the major U.S. indices were up over 3%, with the NASDAQ leading the way up almost 4.5%. The NASDAQ is also up about 1.5% for the year now, and the Russell 2000, which was one of the laggers last year, is now leading the way, only a week in, but still up almost 2.5% for the year. Foreign and emerging markets were also positive, with foreign stocks up about 1.4% and emerging just positive. Now, emerging markets for the year, the only major index that we're tracking that's negative. The chart that we're looking at today is of the S&P 500, and I want to focus on the two blue lines on this chart. First, the thin blue line that's running through the middle, and next, the thick blue line towards the bottom of the chart. The first blue line, the thin one that runs through the middle of the chart, is the 200-day moving average. And I just wanted to mention that the current S&P 500 is below the 200-day moving average. So although we saw a nice bounce in the markets last week, there's still reason to be cautious as we're still under this 200-day moving average, and that could be a bearish signal. Next, I want to focus on and spend a little bit more time talking about the thick blue line going right through the bottom of the chart. And that's a current resistance level that we have on the S&P 500 right now. If you go back and look at the beginning of this chart, in about February and April, that was actually a support level that the S&P 500 bounced off of 2 times and continued to rally. What happened towards the end of last year is we actually broke down below that level, and subsequently we did see a bounce back up to that line. So now that former support level is a resistance level, and there's 2 things that may happen here. What we're looking at is a potential move back up above this resistance level, where we could go back and see the highs that we saw in October and November. But if we get rejected at this resistance level, which we're currently right on, we could see a move lower back down to the lows that we saw towards the end of last year. So there's a lot of things for us to keep an eye on with the S&P 500 moving forward.
Last week's news kicked off with an unexpected visit from China's vice president, prompting investors to start speculating that the United States and China have begun trade negotiations well before the March 1st deadline set by President Trump. Also last week on Wednesday, Apple shares were halted after hours as CEO Tim Cook issued a letter slashing first quarter guidance for 2019, the first time this company's done that in 15 years. And he cited a slowdown in sales of the iPhone in China as the main reason to slash these outlooks. And lastly, on Friday, Fed Chair Jerome Powell took part in a panel discussion, and he stated that the Federal Reserve is now more than ever willing to be flexible on rate hikes and also the tightening of their balance sheet. After that news came out on Friday, we've seen the market rally into the end of the day. Over the past couple months, the market has been waiting to rally off of some good news. And it seems like on Friday, the Fed has finally delivered that first piece.
But the US and China need to come up with a trade negotiation so that the bulls can finally take control of this market.
Thanks for watching, and we strive to give you everything that you need to know about the markets in 5 minutes or less.
Like our Facebook page and share the video. Thanks.